Mainland China and Hong Kong stock markets fell Thursday, after the arrest of the chief financial officer of Huawei Technologies added to concerns about U.S.-China relations and sent shares of suppliers for the Chinese smartphone maker plummeting. Stock benchmarks in the two markets closed down, with the Shanghai Composite Index falling 1.68% and the Hang Seng Index dropping 2.47%. Shenzhen Circuits and Chinasoft International, both major suppliers to Huawei, were hammered in the mainland and Hong Kong markets, falling 9.66% and 11.71% respectively. Just days after China and the U.S. reached a 90-day truce on the trade front, Huawei CFO Sabrina Meng was detained on December 1 by Canadian authorities at the request of the American government. The U.S. is requesting her extradition. Meng, the daughter of Huawei founder Ren Zhengfei, one of China's leading businessmen, an ex-People's Liberation Army officer, and an elected member of the 12th National Congress of the Communist Party of China, was arrested because she allegedly attempted to evade a trade embargo placed by the U.S. on Iran, the Globe and Mail reported, citing a Canadian source. The detention has cast a shadow over the 90-day trade negotiations between China and the U.S. and rekindled concerns among investors about additional measures the White House may seek to contain China's technology sector, particularly the fifth-generation wireless networks. Earlier, Huawei's main rival ZTE was almost put out of business and lost more than 70% of its market value after the Chinese company was banned from buying key American technologies for violating U.S. sanctions against Iran and North Korea. Huawei CFO Sabrina Meng, daughter of founder, arrested in Canada at request of U.S. government, for violating Iran sanctions. There probably will be more such conflicts and clashes over the China-U.S. trade negotiation, and that sets the stage for more volatility in the market, said Wu Kan, an investment manager at Suzhou Securities in Shanghai. The U.S. has a clear intention of containing China's development, and China's technology industry will bear the brunt. Huawei CFO Sabrina Meng has been arrested in Canada, but who is she and why the big deal? The Shanghai Composite fell 44.62 points to 2,605.18. The gauge slid below its 60-day moving average on Thursday after 3 times earlier in the year briefly climbing above the key technical resistance before returning to the downward track. The Hang Seng Index dropped 663.16 points to 26,156.38, and the Hang Seng China Enterprises Index, or the H-share gauge, sank 2.57%. All indices on the Shanghai Composite and Hang Seng Index were down. A gauge of China's 10 biggest publicly traded suppliers of Huawei slumped 3.9% on Thursday in a declining market, more than the 2.2% drop in the CSI 300 index, which tracks performances in both Shanghai and Shenzhen. Among them, Wuhan Fenggu Electronic Technology, which derives 61% of its sales from Huawei, slid 5% to 6 yuan and 12 fen in Shenzhen. Chinasoft International, which relies on the Chinese telecoms company for 53% of its sales, tumbled nearly 12% to $4.07. Broadex Technologies lost 3.6% to 34 yuan and 48 fen, and Sunwoda Electronic lost 3.1% to 9 yuan and 15 fen. Shenzhen Circuits slumped 9.66% to 75 yuan in Shenzhen. Film Tech plunged 4.46% to 10 yuan and 70 fen. Lens Technology shed 4.02% to 7 yuan and 65 fen, and Tongda Group slid 1.15% to 86 Hong Kong cents. Telecom equipment makers linked to China's fifth-generation wireless networks were among the worst-performing industry group on the mainland's exchanges. ZTE tumbled 5.69% to 19 yuan and 89 fen in Shenzhen, and Dingli, a software supplier to telecom equipment, plummeted by 10% to 6 yuan and 46 fen. Meanwhile, pharmaceuticals were slammed over concern drug makers may have to lower prices significantly to qualify for a new procurement mechanism by the central government. Prices of drugs in a government procurement list were cut, reported the Shanghai Securities News, due to initial tender results. Sino Biopharmaceutical shed 15.97% to end at $5.84, its lowest price since October 2017, while CSPC Pharma slumped 14.48% to $13.82, its lowest price since November 2017. Meanwhile, shares of Hong Kong property developer Hopewell Holdings surged over its privatization plan, and traded up 30.62% to $34.55 by close. Hopewell shares shoot up 32% after developer unveils $21.26 billion privatization plan. Chinese game distributor iDreamSky Technology Holdings belly flopped in its Hong Kong initial public offering, closing 8.6% lower from its offer price to $6.03 in its debut.